Welcome back, and joining me for a closer look at what's played out on the market scene today is Graeme Franck from PSG Wealth Sandton, Grayston. Graeme, thanks so much for joining us this evening. Now, markets are digesting softer than expected producer inflation over in the US and also eyeing trade developments while we await, both Presidents Trump and Xi Jinping to sign off the trade deal. Trump has also said he'll be extending, or he's considering extending, that July 8th deadline to wrap up those negotiations with trading partners. I don't know, I would have expected markets to be more in the green, to be more positive, but it does seem like some of those gains are capped. We are seeing really choppy trade, and this has been playing out throughout most parts of the week. What have you made of trade and, I guess, the wait-and-see approach we've been seeing?
Yeah, so just to touch on a couple of points that you mentioned there. The inflation data, as you said, was slightly better in the US than the market was anticipating. So certain people now calling for a couple more rate cuts in the US relative to expectations. I see J.D. Vance actually has taken up the sort of Donald Trump mantra, and on social media was beating up the Fed, telling them that they must start cutting rates a little bit more and be a little bit more aggressive. And, obviously the Fed has come out and said they're a little bit worried about the trade wars and that, that could be inflationary. So they don't want to cut rates preemptively. They'd rather wait and see the data. So that was just to answer your question on the inflation side. On Trump, actually, quite interestingly, I was reading a story just today, and all these acronyms that have been thrown around, like the FANGs, the Magnificent Seven.
Yes.
We had the taper tantrum a few years ago, etc., etc. The latest one to come out now is TACO,
yes.
which basically means Trump always chickens out, and basically saying that he always comes with bluster to try and negotiate, and then tends to extend the deadlines, tends to be more pragmatic in his final approach, etc. And I think the market's basically now seen through that, and some of that volatility that we saw, where it was down 8%, up 8%, that certainly has disappeared, and the volatility index, the VIX, has settled down quite nicely.
And just on the back of the Fed, where we've seen, Trump and his camp coming out on social media and really, calling out the Fed and Chair Powell for being slow when it comes to cutting rates. We do know that Powell's term is coming to an end next year. And there have been reports that apparently Scott Bessent, Treasury Secretary, could be up for that hot spot. What have you just been making around, monetary policy and just what's been playing out, especially as we are approaching a point where Fed Chair Jerome Powell could be out of that spot?
Yeah, I think Jerome Powell has done a very good job. I think just generally most of the Fed chairmen and chairwomen in forget the lady's name now, have all done a good job. So the Fed remains independent. I don't really see any risk to the replacement of Jerome Powell. The one further point I would make is it's quite interesting seeing the disparity between South Africa's Reserve Bank and the Fed. South Africa's Reserve Bank have always followed the Fed historically. And for the first time now, we've got a little bit more fat in the system to be able to cut rates, i.e. our real rates, our interest rates minus our inflation, i.e. real rates, are higher. So we've got a little bit more fat to cut, which is the first time that's been for a long time. Whether yesterday's inflation data out of the US changes that, we'll wait and see. But, it's the South African economy, well, certainly the Reserve Bank is doing a good job here as well.
Okay, let's take a look at what's playing out in the UK. The economy on that front faltering and contracting 0.3%. This also comes after we got softer employment numbers yesterday. Does this impact the Bank of England's next move? Now, policy makers on that front have been on a cutting spree, but some economists are convinced we are in for a pause at the next meeting.
Yeah, I think you're right. The consensus is for them to be on hold at the next meeting. The UK economy has been pretty poor for a while, as has most of Europe, for that matter. The one bright spark, if you want to call it a bright spark, in European shares have been defense, i.e., war. Could hardly call that a bright spot, but the one part of the market that's done well is those. But just generally, the European market, the UK market, has lagged the US, and are trading at multi-decade lows in terms of, if you just take the price earnings ratios in the UK and Europe relative to the US, it's as disparate as it's ever been. So both UK and Europe is struggling at the moment.
All right, talking about wars and now moving over to the tensions that have been brewing over in the Middle East, we are seeing, some tensions between Israel and Iran slightly hurting sentiment today. The oil price was even down 2% at one point. Is this something you're watching, something you're concerned about?
Not really, in a simple answer. I mean, the Russian-Ukraine war, when that started, was more serious.
Yeah.
Obviously, no war's good. I mean, we don't want there to be loss of lives, etc. But the Middle Eastern war, in terms of purely looking capitalistically at stock markets, hasn't really had much of an impact, other than, as you mentioned, on the oil price. And we all know what Sasol has done. That's been very, very volatile over the last, probably multi-years. But recently, the oil price is about the only thing really coming out of the Middle Eastern tensions. But other than that, no real impact on stock markets.
All right, so there's not much company news today, but there was news out from Karoo, Graeme, and I see the share price has been beaten today. It's down 16%. Just walk us through what happened there.
Yeah, so the founder, Zach, I think his surname is Callisto.
Yeah.
He did a book build for 1.5 million shares at $50 a share. So he sold $75 million worth of his stake. When I left office a little bit earlier, it was down 12%. You've just mentioned it's now down, it's closed down 16%. So he still holds many million shares. But clearly the market not liking the fact that he's raised, in effect, $75 million with the possibility of another 200,000 shares over and above the 1.5 million that he's already sold. So that's been placed a lot of pressure on that share price today.
All right, let's get your stock pick. Where are you seeing opportunity this evening?
So I'm going to go for a bit of a boring one in Standard Bank. We do still like the banks. We think they're an incredibly well-managed sector in South Africa, always have been. Standard Bank and FirstRand do stick out. Standard Bank just a little bit cheaper. It's trading on a PE of just over 8 times, dividend yield of about 7%. So, quite a bit of the South African Inc. stocks are trading, at those type of multiples. And we think now's a good time to get involved in some of those blue chip banks.
All right. Graeme, thanks so much for your time and sharing your insights with us this evening. That was Graeme Franck from PSG Wealth Sandton, Grayston.